So beverage stocks are generally covered under consumer staples. The XLP Consumer Staples ETF up more than 9% for the month, outperforming as a lot of investors turn to a defensive play with Omicron. Do you see that defensive play continuing and boosting staples and beverage stocks in 2022?
It's a good question. One of the things we've been tracking is just the concept of volatility and how that's been impacting the staple group performance throughout COVID. And the trend has actually been pretty predictive. So over the past 2 years, there's been about 10 significant bouts of volatility like we saw going into December, say a spike in the VIX index. In every single bout of volatility, staples has outperformed during that period. But what perhaps is more telling is that as the volatility has unwound, the market has gone back on offense, and staples has almost exclusively returned that performance. Said another way, staples outperforms when it's time to be defensive and then underperforms thereafter. And that's been the trend over the past 2 years. What's interesting about December is that this is the most prolonged and widest period of outperformance for the staples sector. So the key question is going to be whether that sustains going into next year. In any case, we've tended to prefer stocks that can offer upside on fundamentals and valuation, sort of irrespective of that macro trend.
Yeah, let's talk about your picks really quick. Two of your picks, one's Coke, the other one's Constellation Brands. Coke, is it for you a global pick? Constellation Brands, a more focused U.S. pick. How do you see an unexpectedly, at least somewhat unexpectedly, stronger dollar and inflation here in the U.S. impacting both of these very different beverage stocks?
Yeah, it's the biggest question for investors going into next year, right? So, the concept of inflation in general has been, a real problem for these stocks over the past year. And that's going to continue going into the front half of next year. And no one's really immune to that, right? So that's going to impact the entire sector. The currency is a relatively new dynamic. So think global stocks, currency more of a headwind over the past 6 weeks. So that's going to hit the names like Coke. Big picture, inflation is an issue for all companies going into next year, specifically in the front half. That's going to create challenges for companies going into next year, but it's also going to create opportunities for relative outperformance and ability to execute differently versus peers. That's why we like Coke. That's why we like Constellation. Just think about Coke. The one-liner I like to use, you probably have the most interesting price-cost lag in all of consumer staples going into next year. They're asset light and pricing is building. That means margins can be a good story. That's why we're positive on margins going into next year. And hey, valuation is still below pre-pandemic levels. You throw in upside to earnings, upside to valuation. That means you can have a two-pronged returns on the stock going into next year. I like that risk reward. Same thing on Constellation, right? You have a stock that has momentum building, supply is improving. Modelo and Corona have been taking a lot of market share, and pricing is building too. And hey, again, valuation is below most of the peer set. So upside on earnings, upside on valuation, again, like risk reward going into next year. The fact that both companies have an element of recovery with the on-premise business into 2022 gives you a little, cherry on top.